Hello traders, this is Rich from Tradesight. This is a look at the market preview for the coming session. This is going to be for Tuesday, October 15th, 2013. We had a positive day across the board after recouping and recovering some very large gaps from pre-market. So today's price action was actually very good, and we're going to give today's grading for the price action A-. Usually we reserve the A rating for something that's breaking into new ground, but I think with the recovery of the gap and closing, somewhat near the high of the session, we're going to give this an A- rating. Now, keep in mind the A- rating, does come in an expense. And we'll talk about with the internal measurements, because the internal measurements from the market, I'd probably give them a C+. We're plus about 500 issues on New York and about 600 on Nasdaq. So it was positive day, but not great. The market had more than enough time to really have some more issues turn positive, but there were just too many negative issues today to give it anything better than a C rating. The one cause for concern is this low reading in the trend, and that's the 0.68 reading. So that's going to figure in as a very low reading in our 10-day average for many days to come. We'll take a look at that in just a little bit. But first, let's take a look at the major indexes in the futures. Let's start with the Dow today. All right, so here's a look at the Dow. We did have this extended decline to the downside that ultimately wound up using the active static trend line for its exact low close on the move, and was the pivot point for the strong up move that started late last week. We also touched the 200 DMA, but certainly the real pivot point was the static trend line here. So that's going to be the level to the downside that's going to be really, really critical, about 14,775. Today's candle was pretty decent. We recouped that gap down. Remember, the cash indices don't show the gap. We actually gapped open more or less at the low of the day here at 5/8 and closed at 6/8. So today's high, that 6/8 level, is going to be tomorrow's first overhead, and if they can clear that, then the 7/8 level is going to be the next area of resistance. Moving on to the ES futures. This will show you the gap. Closed up here on Friday, gap down here in the area of the 6/8 level, closed above yesterday's candle. It wasn't an outside day up, but it was a very strong candle nonetheless. We're gonna have minor resistance at today's absolute high, and then tomorrow the 7/8 level at 17,018 is 1718 is going to be key resistance. That's the 7/8 level, and also the risk line. See the magenta line here? It's the risk line from the seeker sell signal. So double level there. To the downside, we're going to have support right in the area of today's low, and also that 10 EMA. If that gives way below 1683, we're going to find a little better support here at the 50 at about 1675. NQ futures were the one that was the real star today. Definitely outperformed the other majors on a relative basis. Twice as strong as the S&P side, even figuring in the beta adjustment. So really strong day for Nasdaq. You can see here this made a new high close on the move just by a nudge, but it was good enough for a new high close on the move. The 50 DMA wasn't lost on a closing basis, didn't close and follow through. So we're back to short-term positive here. Resistance is going to be 32.81 which is the 6/8 level, and then we got some more levels up here. 34.3750 is going to be the extended target if we're going to run all the way up to 13 bars up in the seeker count before we find some exhaustion. So a couple things to keep an eye on. To the downside, yesterday's low is going to be important support, and then below that, this gap window here is going to be important support at 31.71, 31.72 if we do take that direction. All right, so taking a look at the bonds were lower on the day. Perhaps a little evidence of some more risk on. We'll have to see how that plays out. But certainly starting to leak down below this little trading range that we're in, kind of consolidating this little reversal and this turn up. So right now you can see the MACD here. We've essentially lost all the upward momentum. If you look at the CCI is pointing down actually pretty decently, and right now we're definitely in a little bit of a sloppy downward slide for now. Okay, let's take a look at some of the risk on, risk off metrics. Here's the Dow Gold ratio. You can see that there's really been, during this whole Washington horse and pony show, I'm going to call it, just to be, I guess, a little bit charitable. Dow Gold ratio did not take a hit. There wasn't that classic risk off. Okay, get me out of stocks, give me a hard asset just to so I have a little more protection. Not really seeing that so much. We actually made a new high on the ratio here in favor of stocks over the precious metals. So there's really no flight to quality there. We certainly are not seeing it in the bonds. The bonds have been trending lower, as we just looked at. So right now the investors still have their appetite for risk. All right, next chart up is going to be the S&P TLT cross. Actually getting near the previous high here. You see that investors today were putting on trades in favor of growth over protection. So definitely that's been the key here. We'll see if they're going to be rewarded or not. We've got some room to run before we run into any other near-term resistance levels on the major charts that we just looked at. So if a breakout above the previous high here in the ratio at about 1650 is going to be pretty notable and potentially very interesting. So let's keep an eye on that. All right, here's something that we need to pay attention to, and I hate to tell you to watch something too much, but definitely keep an eye on the 10-day trend. We had that very low reading today in the ARMS index at 0.68. So that's going to be in our 10-day average here for about 9 more days, obviously. So we're all the way down to 0.95. If we get to 0.85, that's our oversold reading, our reversal threshold. Just flipped over the chart here. We still have the 10-day trend here. That's the chart at the top, but down here you can see that when we get to that 0.85 threshold or below, here's one touch. You can see what the market did. This is the S&P down here. Turned lower. Here's another good touch. What we did is we just basically stopped this advance to the upside here, leveled off for a while. We had this touch here, and obviously that was an important high water mark. So you get the idea here, where when you get to that 0.85 reversal threshold, the market basically just empties its tank for the bullish move. So we're not there for sure, but this low reading is going to be affecting this average for a lot of days to come. So if we get another low reading tomorrow, we can quickly approach that 0.85 reversal threshold. So we'll stay on top of this one for sure. All right, so here's a look at the individual sectors on a relative basis, at least the majors. XAU was a little bit better today, but is still a source of funds. Keep an eye on this thing if we approach this double bottom. We saw a risk being put on in the SOX, the BTK, and the BKX. They were all positive on the day, with the SOX breaking out to a new high. All right, so here's a look at the top sectors ranked from best to worst. BTK was top gun. Oil services were nice and strong, outperforming the broad market by a good bit. The only thing that would have been better is if the transports started kicking in a little bit better. The transports were pretty far down on the list here, and were just barely positive. At this point in this whole cycle, we would prefer to see the transports tracking a little bit more strongly up here with the OSX. The BTK doesn't really have to perform that well right now. That's not that important. We want to see these late cycle stocks come on. Utilities index was weak, which had been a safe haven, and they're getting out of that a little bit. And the housing sector was a little bit weak, but everything else was kind of in line as you expect from a day like today. But we definitely would have preferred to have seen the transports act a little bit better. All right, so here's the BTK index. Nowhere near really doing anything too positive here. Essentially, it's potentially just a double level here at this 2000. This 4/8 level was real big support, but we're going to have resistance here at the 10 EMA and the 50. So this probably wouldn't be my first choice for longs tomorrow. Probably want to take a look at the SOX index a little bit closer tomorrow. See the SOX just is trying to nudge up above this 8/8 level at 500. Made a new high close on the move. Okay, we're only 9 bars up here in the secret count, so we got a few more days here to run before potentially running out of ammunition here, according to the seeker, in both time and price. So maybe a day tomorrow to gain this 500 level, and hopefully we can lose that and continue on. But definitely have some long ideas ready in the semiconductor group. And keep in mind, we've been in this kind of consolidation area here with this dunk to the downside here. So the MACD is not overbought. The CCI is nowhere is not even near overbought yet. Got to get up above this 200 level and get closer to 250. And right now we're only at 166, so we got some more room to run there for sure. The banking index did push above the 50 DMA, but you know it's still in this relative downtrend. It is short-term positive, could turn intermediate-term positive with another push up tomorrow. If that is the case, then 66.5 or so, 65 at this 8 ace level is going to be the next level that's in play. Here's a look at the transports. The transports are 9 days up now, so we haven't hit a new high. Really need to get this thing going. If we print a 13 up here, anywhere near this 8 ace level, we're going to have some pretty good resistance and probably wind up turning back to the downside. So definitely keep that in mind. All right, last thing to look at here today. Final chart is going to be the oil futures. Still using this 100 level as key support. There's definitely bids for this thing down around 100 for now. If we close back above the 10 EMA here, we're gonna flip the short-term positive and probably put this this static trend line in play just under 110. It's right around 109. So if we close above about 103, 104, next trip is going to be right to 109 in my opinion here, according to our seeker and in the chart here. So keep an eye on that. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.